presentation will be divided into two parts, which is Part A and Part B. Now, let's focus in Part A. In this part, we will cover segmental reporting under MFRS A. There are four main points to be discussed, which is company background of Maxis, management approach, reproduce a segmental reporting, and the conclusion that covers advantages and disadvantages. Maxis Berhad or Maxis Communication Berhad is a Malaysia telecommunications company which providing a higher quality networks and wider reach in Malaysia. Maxis is one of the oldest and the largest telecommunications company in the country. The total subscribers of Maxis is 11.7 million at the end of June 2021 and is founded in year 1993 by its founder Ananda Krishnan. Maxis' vision is to bring advanced communication service to enrich customer life and business in a manner that is simple and personalized by efficiently and creatively harnessing leading edge technology and delivering a brand of service experience that is reliable and enchanting. Maxis Communication Berhad is a holding company which provides mobile, fixed lines, and international telecommunication service in Malaysia. Among the other services provided by Maxis Berhad are internet and broadband service and wireless multimedia related service. It also possesses, sustains, builds, and runs radio facilities and associated switches. The name Maxis Berhad was given after the company was renamed after its own name, which was Binarian Berhad in the year 1999. And the company now based in Kuala Lumpur, Malaysia. Operation under Maxis Berhad has begun in the year 1995 and now is leading telecommunication service provider in Malaysia compared to Digi and Celcom. Maxis Berhad also listed on Bursa Malaysia on 19 November 2009. First company that launched 3G Connect, Packard, PC Webmail, Video Mail and Prepaid 3G is Maxis. 3G networks offer mobile telephony at broadband speed enabling internet access through Malaysia. Maxis allow users enchanted communication combined with entertainment and information on the go such as video call, mobile TV and games.
Now let's proceed to the management approach. Factors to be considered having segment reporting. The first one is the nature of the business activities. The nature of the business activities is defined as an action carried out by an entity with the primary goal of profit maximization. As we know, for Maxis Berhad is a Malaysian-based investment holding company, which the company is primarily engaged in providing coverage telecommunication services and solutions in Malaysia. The second factor is the existence of managers responsible for all activities. The managers of segment reporting is responsible to oversee all of their activities and communicate directly with the chief of decision maker. The last factor is the information presented to the board of directors. The chief of decision making has to refer the board of directors report since they include all the credible information about the whole entity's performance. Types of segment are: first, business segment. It is a unique entity that engages in providing goods and services. The business segment operated by Maxis are mobile services, fixed services, international services. Moving on with the second type of segment, which is geographical segments. They also an item of entity engaged in providing product and services but only within particular economic environment. For example, other than Malaysia, Maxis has ventured into the telecommunication market in India and Indonesia. The firm has localized its products there by having local celebrities in their advertising and providing services that is adapted to several local needs such as mobile astrology in India. Lastly, the third type of segment is psychographic segment. Through psychographic segment, Maxis has allocated its product according to the lifestyle of consumers. These range from travel, entertainment, traffic check, API reading to dining hotspot. Besides that, information is stocked, news and entertainment is provided to consumers who pay for these services. Next, Chief of Decision Maker and its responsibilities. The Chief of Decision Maker are responsible for allocating resources, assessing performance of operating segments, and making strategic decisions. The Chief of Decision Maker of Maxis Berhad is Tan Sri Mohsani bin Mahathir, who is appointed as Non-Executive Directors and also Chairman of Maxis Berhad.
Next, we move on to the identification of reportable and non-reportable segment. The process to identify reportable and non-reportable segment is based on MFRS 8, where an entity is required to use a certain amount of judgment in determining the operating segment of the company while conducting 10% threshold test and 75% total revenue requirement. The business segment are to be closed separately and classified as reportable segment if it meets at least 10% of threshold test and 75% total revenue requirement respectively. There are three methods of 10% threshold test, which are revenue basis, profit or loss basis, and asset basis. Meanwhile, for the 75% test, it will be only conducted based on a revenue basis of 10% threshold test to determine whether the segment exists 75% or not. For Maxis Communication Berhad, we will use the revenue basis of 10% threshold test as well as 75% test is identifying the operating segment of the company. Based on the annual report, the total external and internal revenue of 8,967,000 is used to measure 10% threshold test of the company. Based on the annual report, the total external and internal revenue of 8,967,000 is used to measure 10% threshold test of the company. Since there are 7 operation segments of Maxis Communication Berhad, the 10% test has resulted in 4 reportable segments and 3 non-reportable segments. As per calculation, the reportable segments are mobile service, enterprise fixed service, international gateway service, and home service, as produced 54.85%, 22.38%, 12.22%, and 19.91% respectively. Whereas inter-segment revenue comprise network service and management service indicated as non-reportable segment since it results below than 10%. From the calculation of 10% test revenue basis, the 75% test is conducted by dividing total external revenue for reportable segment of 8,967,000 with total external revenue for all operating segments. The result of the 75% test Maxis Communication Berhad is 82.25%, which exceeds 75%. Therefore, the existing reportable segment, which are mobile service, enterprise fixed service, international gateway service, and home service, will become remain, and no additional segment should be reported. As shown, the new segmental report of Maxis Communication Berhad is reconstructed, reproducing 4 reportable segments and 1 non-reportable segment. The four reportable segments consist of mobile service, enterprise feed service, international gateway service, and home service. Whereas the other three reportable segments are combined and disclosed under all other segments since it does not satisfy 10% or more. Hence, the adjustment for all operating segments by book tests are essential in determining the reportable and non-reportable segment, as well as the preparation of segmental report.
For the conclusion, there are advantages and disadvantages of the segment reporting. So let us discuss about advantages first. Firstly, it's transparency and better insights. The segment reporting helps to better evaluate the sustainability and growth of a company and monitor performance of the management. Okay, why the segment reporting is being transparency? Because it helps our product or service and show our potential customer that you are trustworthy and help them to make more informed decisions. Next, better predictor of profitability. Okay, what is profitability? Okay, it is the primary goal of all business ventures. Without profitability, the business will not survive in long run. So, measuring current and past profitability and projecting future profitability is very important. Okay, why it is advantage for the segment reporting? Because it enables users of the financial statement to be better and able to predict the future profitability of the organization, particularly where segments are involved in diverse activities. Okay, let us move to the disadvantages of the segment reporting. Firstly, its emphasis on the present. Segment reporting can place too much of a focus on the present time, or in other words, short-term numbers. Okay, for example, a business might create a division just for its online to work. That division could run a significant deficit before the right people and infrastructure are in place. If these losses are outweighed by the company, it's really affect the company overall performance, so they might not stand out on the financial statements. Next, there might be data manipulation, because segment reporting lends itself to data manipulation if the information is reported through the management eye style. Okay, manager may group together in the business or with different business models. It can also cherry pick metrics to send the desired message to the stockholders. Losses in internet division, for example, they could be grouped together with an unrelated profitable business unit to paint a better picture of the performance. So through this method, they can manipulate the business data.
Okay, for basis of preparation of interim report, the financial statement of the group and of the company have been prepared in accordance with the Malaysia Financial Reporting Standard, as we know, MFRS, International Financial Reporting Standard, and the requirement of the Company Act 1965 in Malaysia. The financial statement have been prepared under the historical cost convention as well as disclosed in the summary of significant accounting policies in Note 3 to the financial statement. The preparation of financial statement in conformity with MFRS require the use of certain critical accounting estimates and assumptions that affects the reported amounts of asset and liabilities, and also disclose of contingent asset and liabilities at the date of the financial statements, and the reported amounts of revenues and expense during the reported financial year. It also requires the director to exercise their judgment in the process of applying the group's and the company accounting policies. Although these estimate and judgment are based on the director-based knowledge of current events and actions, actual results may differ. Lastly, the areas involving a higher degree of judgment or complexity, or areas where assumptions and estimates are significant to the financial statement, are disclosed in Note 4 to the financial statements.
Okay, for the first policy is property, plant and equipment. For the PPE, the company use the policy which is stated at the cost less accumulated depreciation and impairment loss. For the cost included expenditure including borrowing and staff costs that is directly involved to the acquisition of the property, plant and equipment. Next, about telecommunication asset. Okay, certain telecommunication assets are stated at the amount of cash or cash equivalent that will have to be paid if the same or an equivalent asset was acquired. Next, we talk about freehold land. For this company, the freehold land is not depreciated as it has a infinite life. Okay, all other properties, plant and equipment are depreciated on the straight line method to write off the cost of each category of asset to its residual value over its estimated useful life. Okay, the assets are summarized as below. Firstly, building, which is 44 until 50 years. Next, telecommunication equipment, which is 2 until 35 years. For the motor vehicles, which is 5 years. Office furniture, fitting equipment, 3 until 7 years. For the second policy is payables. So payables, including accruals, represent the company liabilities for goods received and services rendered to the group and the company prior to the end of the financial year and which remain unpaid. Payables are classified as current liabilities if the payment is due within 1 year or less. If not, they are represented as non-current liabilities in the financial statement. In addition, payables are recognized initially at fair value net of transaction costs incurred, which include transfer, taxes and duties. Payables are also subsequently measured at amortized cost using the effective interest method. So that's it about the accounting policy that used by the company.
From the report, we can see that there are 5 types of interim reports prepared by Maxis, which are: first, unaudited condensed consolidated statements of profit or loss; second, unaudited condensed consolidated statement of comprehensive income; third, unaudited condensed consolidated statements of financial position; fourth, unaudited condensed consolidated statements of changes in equity; and fifth, unaudited condensed consolidated statements of cash flow. So I attach here one of the example of interim reports prepared by the Maxis, which is unaudited condensed consolidated statements of profit or loss for the second quarter ended 30th June 2020.
The period for the current and comparative of each statement is prepared by Maxis Communication Berhad. Its accounting period will end at 31st December each year. The period for the current and comparative of each statement is prepared by the company according to MFRS 134. It will be measured at 1st April 2022 until 30th June 2022. That is equivalent to the second quarter of the Maxis Communication Berhad, because it also have a reporting period which is 3 months. Meanwhile, for the statement of profit or loss and other comprehensive income, the current interim reporting period is 3 months, starting from 1 April 2022 until 30th June 2022. The cumulative SOPL for the current financial year today is 6 months from 1st January 2022 until 30th June 2022. Statement of changes in equity SOCE. The cumulative financial year today is 6 months, starting from 1st January 2022 until 30th June 2022. The comparative SOCE of the immediately preceding financial year is 6 months also, starting from 1st January 2021 until 30th June 2021.
Okay, for the last part, we like to propose two adjustments to be made by the company. Firstly, through the annual report, we can know that during the year, the group changed its basis for determining the measurement of deferred tax on intangible asset with indefinite useful life based on the principle clarified. Okay, from the above scenario, the group recognized decrease in deferred tax liabilities of amounting to 335 million on its intangible assets with indefinite useful life. Okay, with a corresponding increase to the retained earning. For the second adjustment, the company should acquire intangible assets either as part of a business combination or through separate acquisition. Intangible assets acquired in the business combination are recorded at their fair value at the date of acquisition and recognized separately from goodwill. During the financial year, the company should recognize goodwill worth of 90 million ringgit Malaysia for the acqui-hire and allocated it to the Converged Telecommunication Service and Solutions. Okay, let's look at the financial statement that has been proposed. Alright, let us look at the financial statement. Okay, for the first adjustment, it's about adjustment on non-current liabilities. Okay, in the table, you can see in year 2021, the deferred tax liability is 382 million, while in 2022 is 249 million. Okay, from this we can see that deferred tax liability is decreasing, which is good for the company. Okay, when the deferred tax liability is decreased, our retained earning will increase. Okay, for the equity, that is retained earning. In year 2021, we can see that our retained earning is 4,154, while in 2022 is 4,587 million. Okay, from this we can see that our retained earning has been increased because of the proposed adjustment made on the adjustment 1. Okay, for the adjustment 2, we can see about our intangible assets, which is goodwill. In 2021, our goodwill worth of 9,565, while in 2022 is 9,655 million. Okay, when we make the second adjustment, we can see that our goodwill value, which is intangible asset, has been really increasing.